Welcome to readtheticker.com. From the Richard Wyckoff Associates text on how to study stocks and tape reading, section 18M page 2 has an example of Richard Wyckoff's position sheet. And on this position sheet you have information broken down by sectors. You have stocks, and then you have a number 1, 2 and 3, 4. The 1 is when stocks rally very quickly, a certain amount of percentage, like 10 to 15%. And 2 is when it takes a little bit longer. So 1 is fast, 2 is slow. I think 3 is when it goes down, and 4 when it goes down fast. So this here is a wave measure of stocks by sector. And the way he would measure a wave is he would look at a point and figure chart and say, well, this particular stock has moved 10% in 5 days, so that's a fast wave. Or this stock has moved 10% and it took 40 days or 30 days. That's a 10% move and a slow move. And obviously if it went down, it got a tag of 3 and 4. So this was a wave monitor of stocks by sector. And then he would do a summation down here to work out the overall trend. And Richard Wyckoff stated in this document that he used it for over 20 years. And it's there to monitor the waves. And Richard Wyckoff basically said when you end up being a tape reader of the stock market, you must follow the power of the waves. So, based on inspiration from this, we've in readtheticker.com we've developed a P&F wave swing scanner. Before we go there, I'll just show you the document I'm referring to. It's the Richard D. Wyckoff Method in Trading, Investing in Stocks. We are talking about the Wyckoff position sheet. So what we have here, we have, I'll just get to fit the screen. We have the swing scanner P&F wave. It's part of the, you select swing scanner or swing in the main menu, and it brings up swing scanner P&F wave, or you can select the original one here. You have this option here. And what this basically does, we have here Wyckoff wave. You can select the Dow Jones Industrials. You can select industry as Richard Wyckoff would. You can select individual sectors with stocks in those sectors, what have you. And what this does, down below here we have, for example, here we have BAC. That's showing a wave 2. Now the waves our numbers are a bit different. They're numbered 1 to 3. A 3 wave is where it goes up twice the average within 20 days. A 1 wave where it goes up 1.5 times the average greater than 20 days. And a 2 is when it goes up 1.5 times greater than 20 days. All the notes up here explaining what the 1s and 2s mean. So this line reads like this. So we got this one, BAC had a 2 wave. Total of all the waves is 0, so if you add up 2, 5, and add up all this line here, you'll end up getting 0. Add up all that, you get 6. So the last wave of 2, but over 21 waves of bars, the total is 6. It's still quite bullish. Where it's shaded blue or shaded red, this means there's no negative waves. So you've got a strong trend with the 3s and 1s. And there's no strong negative waves down, so still maintaining a bullish. So when you've got a red shade, that means it's all negative. Negative waves and no bullish waves. The 3 wave, because it's the fastest wave, for example, it can go up twice the average under 20 days, you have to be aware of climatic situations. So it might be a buying climax or a selling climax. And ideally what you want to see on a strong move from the bottom is a 1 wave, because a 1 wave is a slow accumulation of a price movement where it takes longer than 20 days to achieve 1.5 times the average price movement. Over here we've got step between 20 and step between 130. One of our indicators is called RTT steps. And I'll just show you a highlight of that, so I'll explain what we know what I'm talking about. Right, here we have Ford, and we have this indicator which is a step. As you can see, what it does is it counts for a period of time. So say 20 bars back, how many closes within the step. So 200 bars back, how many closes within the band of the step. So this is a step, see, stepping up. And there's the band, so how many closes within that range of that step, and it counts back 200, and so it counts the close. So he ends up getting a percentage. And that would, for example, here we have step between 200. Here, say 68% of all closes within the 200 step. Now, why is this important? Well, accumulation is correlated with tightness. So when a price action of a particular stock is not volatile, not bouncing outside a bar range, like a Bollinger Band, it's not bouncing outside the range of the Bollinger Band. That means it's been well controlled by the composite man, and it's been held within the tight range. So thus it's been accumulated, and this can last for months to years, or especially so when it's been in a volatile period. So prices bouncing up and down, and all of a sudden it ends up being within the RTT steps. That means the accumulation's tightened up because the bids are turning up at the lower level and the offers are turning up at the upper level. So that means they're keeping it in a range. They're keeping a quite control on it. When price is outside the range and it's a low percentage of tightness, that means to find the bid or find the offer, they have to go outside the particular range. That means it's not controlled. That means people who are trying to sell can't find bids and they can't find offers when they want to buy. So when it's tight, that means a high percentage between a certain amount of period. You know it's been well controlled, been well accumulated. For example, let's have another look at, we've got Ford here, like I said. Here we have the latest wave as a 1. The summation of all that is 1. So here we have the last wave was a 1, the previous wave was a 2, and we've got a negative 3. So this is Ford. Now all that data you see in the PNF wave, it's based on a chart in the pop out of the swing. It is based on the first PNF chart down here. See, here we have our daily PNF chart for Ford. Statistics there. There's the average, 6.18. So we've got a 1, so that there bar there has gone up 14.4. Whoops. That bar there, it's a 1. It's gone up 14.4%. I'll keep this thing still. 14.4% in 22 days. So that's over 20 days, and it's greater than 1.5 times. That's why it gets a 1. 2. So this one, the 3. This 3 went down 15.1%. Sorry, that's not right. Went down 11.6% in 8 days. That's a fast-moving 3. Here we had another, this is a 1, it's went up 27 days and 15%. So you can see there's accumulation going on here if you look at the wave structure, and this is how then the wave, as you can see, these bars here showed a bit of period of dullness. See how strong, and see how the red bars aren't very strong? That's the volume per wave. So you can sort of see accumulation was coming in there. So same sort of logic as the Richard Wyckoff position sheet. It shows the last wave, and it gives you an idea what time it was for a wave, so you can tell where there's climatic action. This point and figure chart is it's a standard point and figure chart per each stock in our database, so the scan will show that. And really what you want to see in a good trend, you want to see lots of blue ones holding their 50% retracement and moving up. For example, over here, if I scroll to the left hand side where 4 was quite strong, we had 2, 3, 3, and no strong red waves down on this up period here. See, 3, 3. So in this period here, we would have had all blues, and we had the first down wave there. So it gives you an idea, which helps you out to work out what's the wave structure, where the strength is, and obviously more so comparing it to other stocks within a sector. So ideally, if you're bullish, winners breed winners. So you want to find, for example, here lots of blue. The other thing you can do, which is quite interesting, you can find, for example, across the way here we've got our trend tool. You find which ones are very trending. For example, this one here, what's that one? I think that's DD. See, DD is trending quite high. It's had a 3 dip there. So if it was a strong trending stock and it had a 3, you'd be looking to buy that on the dip because those are very rare within the trend. So I'll show you what I mean. Bounce that up. Oop. Build for a second. From here, from the end of the between step part, the scanner is the same as the GUR scanner with implied volatility trend and what have you. Okay, back to DD. I'll scroll down to the. Obviously, this is a standard pop-out chart. You can manage what you see and what you don't see. So here's the three there that I was talking about. So it's had a strong trend up, you get a strong three-way hold support. So therefore, they're there to sort of consider whether you would buy or not. And that would have been here. Punched up, fell down, tested there, and that's where your entry would have been. If you understand Wyckoff logic. Because you never know what happens after that, but it showed the selling had dried up. You can carry on there. Here we've got a much stronger wave punch down, so I'd like to see a test on that. See how it punched down here? Strong wave up, but that's weakness because it punched it all the way back down support. When you have price punch up to break resistance and then price smash back down to support, that's not in the plan. I mean, it should have stopped. Should have stopped around here if it was going to go up higher. But smash down support, that is actually weakness. Like I said before, you can do your Wyckoff logic with understanding the bars there. See how the red bar's a bit higher down here? A bit more selling pressure coming in. The Wyckoff position sheet is there to monitor the waves. Richard Wyckoff said in a high level sort of study, you're here to follow the waves for tape reading. You want to find a change in pattern in the waves. You might have a lot of weak waves and all of a sudden you get a strong wave up. It could be volume off the bottom. This is how you monitor the waves. So if you're monitoring 10, 20, 30 stocks, for example here, this is a list of my personal groups. I might put my security studies in there. I'm monitoring that for my members, put my stocks in there. And what it does is, because this might be my stock watch list for a particular area, and it has all my data down here for my stock watch list, so I can monitor the waves for my stocks. Very powerful. Very interested to see the tightness. I can sort with RTT rank, find the trending ones and not so trending ones. And I've got my strong dollar, obviously I've got no negatives there, and I've got my strong Starbucks and my strong Apple. Scan my trends. If I want to buy dividends, if I want to take advantage of stock options, I can see my spreads, which ones are best for stock options. Implied volatility, highs and lows, volumes. I can monitor my waves and my options, stock options strategies. Thanks very much for watching.